Hi everybody, this is Ospreyeye from mychartcoach.com, and in this video we're going to take a look at some of the stocks that were in play today. Okay, so first up, let's take a look at NEOT. Okay, so this was a huge move, closed up 230%, so congrats everyone on this giant move. It is at overbought levels on RSI and FASTO. There was a big gap up open today on merger news, and so what this did was it created a gap on the chart. You can see the space between a high of day yesterday and low of day today. And so what this formed was an island reversal pattern. Notice there was a gap down back here in June. This is the top of the gap up here on this candle, and this is the bottom of the gap. And when there was a big drop in June, it formed this big cluster of candles. And then today there's been another gap up open. And so the share price is running. It's formed this island reversal pattern. It's broken above the 200 and the 300 and 200-day simple moving averages at 119 and 123. Those are the key levels to hold if the share price does pull back. You would like to see those levels turn into support. If there is a close below that level, you could see potentially a drop down here to the bottom of the gap and the 100-day simple moving average, since it had not been tested. Currently EMA4 is up here at $1. To the upside, what needs to happen is you can see here when the share price came up, and we had pointed this out in the chat today that this was going to be the intraday resistance, was this June support level. Notice how 190 here, the 190 zone was big support in June. That turned into resistance. So it's going to need a break through that to make it to the top of the gap. The top of the gap is up here near 230, up here at this candle. And so many times once a gap fills, even though there's a space down here, we would call this a gap fill. If it hits the top of the gap, many times that's a climax event and could signal the top of this run. If it breaks above that level, then you're looking at the 250 level, which was the high close from back here in May. That would be the third key level to break. So it's 190, 230, and 250. Those are the upside levels to break. If the candles do work back in the bands, you want to see that 200 and 300-day simple moving averages hold. Notice there was giant volume behind the move today. The share price was trading higher in after hours trading, so we're looking at a potential gap up open. Go ahead, please follow the 15-minute chart. This here is a chart that we posted on this candle right here. We gave the heads up that this chart was heating up on the big break above resistance and on the volume spike. So these annotations are from back here on the 9th, and yeah, I noticed that there was what looked like a huge volume spike when that happened. These were all clues that the chart was heating up. So we've been all over this play. We've been on top of it since the middle Bollinger Band and the 50-day simple moving average turned into support. But this has just been a continuously continuing in the uptrend. It's been a good swing trade. It pulled back, it held support, and then today was the big payoff with the huge move forward. So yeah, so just to remember, oh yeah, and to keep in mind the breaking above the bottom of the gap is a big development that does signal more upside potential. But keep in mind, many times you just have to stick with the trade. A lot of people will trade and then leave it, and then they find out a couple days later that it's still running higher. Okay, so take a look at TRXC. Okay, this stock is doing, had really nice follow through today. It had a nice move yesterday. It had the gap up open, and then it ended up forming a indecision candle. Well, today there was a gap up open, and it ended up running all the way up to $5. So congrats to everyone that held this overnight. You were rewarded with the gap up open. There was a pullback from high of day, and so that does show profit taking, possible shares being sold. There are two gaps in the chart right now. So there's a gap between these two candles and a gap between these two candles, and so those will be key levels below. So if the share price does pull back and end up consolidating, what you could see is a potential gap fill. And so the gap fill would, for this first gap here, would put it down to around $3, would fill the gap. And then EMA4 at 280 is going to be the key support level. If it breaks below that level, then you could see it drop down. As long as it holds the middle Bollinger Band down here at 160, the uptrend should continue. But notice there's a gap down here as well. So that's what you always have to be concerned about when there are gaps in the chart when you're trading penny stocks, is the potential for the share price to pull back and fill the gap. But right now it's breaking out. It's had the good news. It's pushing higher. So there's two gap up opens. Today's candle is floating above the upper Bollinger Band. Sometimes the candles will work their way back into the bands. If that happens, then you want to see that EMA 4 at 280 support hold for maximum bullishness. What we like to do when a stock is breaking out on the daily chart and it's making a 52-week high like TRXC did today. Notice how it hit $5. That was the highest level that it had been at since, if you have to go back here, in March and April of 2016. And so that's the level it came up to. It hit right up here in this zone and pulled back. And so notice the high close here from the second candle, the second week of April of 2016 is the big level to break. If it can close above that level for the week, that would signal more upside potential. If it comes up here and it hits this 525 to 550 resistance zone and it fails to break, it could form a double top. As you can see here, this jar is now full. So now you've got a full jar. The cycle has been complete. Basically, it's right there. It could, it's come from up here at $5, came all the way down below 50 cents, and now it's made its way back up to $5 again. So now it's going to have to turn this 525 zone into support in order to head higher. If it fails to do that and it pulls back, what you want to see if you're a bull is you want to see this 200 and 300 week moving averages turn into support. The $3 zone is a big level to hold. Notice there is a gap back here down to that 160 level. If it pulled back down to the 100-week moving average at 172, that could put it in range to fill that gap below. So really you want to keep an eye on this 3 to 320 level, and if it drops below $3, that would signal downside risk. If it can break above 450, then you could see this $5 tested again. If it closes above this high close from April of 2016, that would signal more upside potential. Now take a look at the 15-minute chart. This is the one that we showed yesterday, where we showed everyone the break above resistance and how it signaled more upside potential. Notice that the candle here at 230 closed above high closed resistance. That signaled that it wanted to head higher, and then everyone was rewarded. Notice that it held EMA 8 support here. It stayed above the middle Bollinger Band. It stayed above this ascending support line. Those were all signals that it was still in play for overnight swing trade. So traders were rewarded overnight, and it ended up making this nice strong move up here to high of day. Notice that you had the climax spike, so you have the big volume and then pull back off of high of day, followed by a red volume bar and then a downtrend. And so notice how there's this tight falling wedge into the close, how they walk this down, with lighter volume. And so what's happening now is you've got this essentially a double bottom intraday at this 4 support zone. The candles did close below the middle Bollinger Band, currently at 420. If that level turns into resistance, which it did today, that would signal downside risk, and then you're talking about a drop down here to the 50 simple moving average at 341. If you see a drop tomorrow below 390, that's going to signal downside risk, and you could see 341 tested. So this isn't the move that bulls wanted to see heading into the close. Notice how this was signaling up, this was signaling down. So it can break out higher, and if it does get above 420, then what you want to see is a break above this high close, which is at 470. If you see candles forming above 470 on the 15-minute chart, that'll be a signal that TRXC is still in play and that to continue riding. If you see the middle Bollinger Band turn into support and a drop below that 390, the 50 is a huge level to hold. If it fails to hold the 50 simple moving average on the 15-minute chart, that signals downside risk. The chart's broken, and then what you could see here is this first gap getting filled. Notice the gap right here. So the gap is below the 50 simple moving average. So gap fills always become targets on pullbacks. So yeah, keep that in mind. Okay, so yeah, let's take a look at DEST. The stock had a really nice move today. It closed up 48%. You've got RSI and Fasto overbought levels. Fasto is pretty much maxed at 98 here. Bullish crossover on plus DI, crossing over ADX here, the black line, and then you can see where plus DI bounced off of minus DI. So this was a big reversal. What happened is there was a strong uptrend here for DEST. You could see back here in the second week of September, the middle Bollinger Band turned into support. It broke above the 50-day simple moving moving average, and then heading into last week, it had this big pullback. Notice it was down 4 days in a row, and then boom, you know, then there's a catalyst today. You got to keep that in mind. A lot of times they'll pull it back to load. Check out how it did close below the middle Bollinger Band on Monday, and then today there was this huge catalyst to drive it higher. Notice the giant volume spike. Okay, so and then it ended up closing above the bottom of the gap. Notice there's a gap over here in July, and so the close above the bottom gap signals more upside potential. This is the top of the gap up here around 290, and so the key level to break now is the 100-day simple moving average at 250. If it can get above that, then you're looking at a potential run up here to the top of the gap around 280. If it can get above that, then you've got the 200-day simple moving average at 354 lined up with the second gap on the chart. And the 200-day simple moving average is lined up at the bottom of the gap of the second gap, the bottom of it. And then you've got the top of the gap up here lined up with the 300-day simple moving average. So this is a double gap chart. So yeah, pretty interesting play here. It's got a very nice uptrend going. It had a huge volume spike today, and it closed very strong. The candles did close above the upper Bollinger Band, so if the candles do work back into the bands, what you want to see is the bottom of the gap, which is at $2, and EMA 4 at 198 support hold. Okay, take a look at APHB. Okay, this is another one of the plays that we've been all over, and then today was another payoff day. You know, it really pays to be able to stick with the trade and be able to have a little vision to be able to see that a stock has more upside potential. And so if you take a look, this is a chart that we posted a few days ago. We posted this chart on the break above the resistance on this white candle right here in the first week of October, and the break was above the one what we were calling the 108 resistance zone, which was the top that formed with the top of this candle in July and the top of this candle in September. And so the close above that on the first week of October was our signal that this stock was in play and ready to head higher. And notice how 108 turned into support. So all it took was patience. People get so freaking impatient, and you know, it's making little moves, and then they're like, oh, this is boring, and they jump out and they run to the next thing, and while this thing is totally heating up, and then today, boom, there's the big payoff. So sometimes, you know, you have to let it marinate if you're a swing trader. As long as EMA 4 support is holding, as you notice, all these candles are riding that pink line, the signals to keep riding. Now today there was the big payoff. It busted above the bottom of the gap. Notice there's a gap on this chart as well. We love gaps. We're all about gaps and gaps fills and gap setups. And so notice that this is the top of the gap up here, and then this is the gap down. So there's actually two gaps on this chart, and then there's a gap between this candle and this candle. So it's a very odd chart. The share price pulled down. It had this gap up open, and so it created a gap right here, and then between this candle and this candle there was a big drop, and so there's two gaps. There's a gap within a gap on here. And so basically the top of the big gap is up here at 220, and so that's going to be the big resistance level. Notice how that's lined up with the 200-day simple moving average. If the share price gets up near the top of the gap, it's bound to hit that 200-day simple moving average. The next key resistance is going to be the support level here at about 180. So if we can get above that 180, you could see both of these gaps fill. Both gaps fill. The bottom of this second gap is at $2, so that'll be another key level to break. You notice there was a close well above the upper Bollinger Band. If the candles do pull back in the bands, you just want to see EMA 4 support holding, currently at 130. As long as it's holding, the swing trade signals to keep riding. So yeah, nice move here, big volume spike. Notice that we also alerted that this was setting up on the PSAR bull flip. Notice how the green dots flip below the candles. That signal the chart was heating up. We also pointed out there were MACD bull crosses on both time frames and a bullish volume spike. These were all signals that the chart was heating up and signaling more upside potential. So it really pays to learn how to read the charts because yeah, it's just that's what it's all about. So check out RXII here. This chart is heating up. Want everybody to keep an eye on it. We had quite a few stocks in the day that were forming nice patterns. We put a lot of attention on NEOT today because it was the big play, but there's several stocks that are setting up, and RXII is one of them. So we're keeping an eye on it. It had this long downtrending channel. Okay, and then it had this crazy long lower wick here, and then it's been heading up ever since. So you got some people that loaded down here. Notice the good volume. And then today it closed back above the 50-day simple moving average. That's the green line at 53. We want to see the share price stay above that level. If it drops below 53, that's going to signal more consolidation and a risk to hold. It had closed above the 50-day simple moving average on the 10th, and so we're looking for that level to turn into support. And notice the candles are hitting the next key level. That's the 100-day simple moving average at 57. Back here in July, it closed above the 100-day simple moving average, and it failed to turn that level into support and pulled back. And so we're looking for a bullish change in trend, and the trade here would be between the 100-day simple moving average and then up here at the 200-day simple moving average at 63. So if this, so it's between 53 and 63. If support can hold, it's got to break above 57. If it can close above the 200-day simple moving average and turn it into support, then it could run back up to this high close, which is at 75. So keep an eye on RXII. Another one to keep an eye on is AKER. This is a bounce play. It's oversold on Fasto. We want to see RSI get back above 50. So this stock, had the big run up to the 300-day simple moving average, and then they've got some dilution going on and some shares being converted at $1. They did have a $1.98 conversion rate, which made this look like a better play, but then they reduced that down to $1. But still at $1, that is above the current share price at 88, and we know that they like to sell shares above the price that they're getting the conversion rate at. So look for a bounce here. It's down 3 days in a row. It's holding this middle Bollinger Band support at 90. We're calling this 90 support zone is the key level to hold. If it drops below 87, that's going to signal downside risk. There's already downside risk that it's closed 2 days in a row below the middle Bollinger Band, and we know that they are diluting, but it looks like it's setting up for a technical bounce. It has to get above the 50-day simple moving average at 94. That's the green line here. Notice how light the volume was today. So really light volume. The sellers have tired. The key level to break is going to be above this 100-day simple moving average at 108. If you see it get above 108, then it could run back up to this 126 and high close resistance level. The reason why we're on this is take a look at the 15-minute chart. And you can see here that this is the AKER 15-minute chart, and it just consolidated sideways today. It formed what looked like a double bottom here at 87, and then it held that zone and traded sideways. It's got super tight Bollinger Bands. You've got the 50 simple moving average down here at 89. You've got the middle Bollinger Band at 88. If it can bust above both levels, that'll signal upside potential. And then if they can get above the 300 simple moving average here at 91, the blue line, that's going to be a signal that it really wants to get moving. Notice how light the volume was here, so we're looking for a bullish volume spike and a push above resistance. If it drops below and it breaks below that lower Bollinger Band at 86, then it will no longer be in play. So we're keeping an eye on it for a potential bounce. The MACD bull cross and the 12, 26, and 9. Notice how it's still, the MACD line is still above the signal line, so that was a signal the chart was heating up. Along with the 8, 13, and 5, that's crossed back over a couple of times and it's pinched right now. So keep an eye on AKER. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Okay, thank you.